All right. Good evening to everyone. I am back today with a market review on dollar. I am giving my thoughts on this and explain what I'm looking for, why I'm looking for this in the upcoming uh, quarter as we roll into Q3 and Q4. I'm going to give my thoughts on it and have some understandings about dollar. So, without further ado, let's get started. As always, we're going to have our word of prayer. Dear Heavenly Father, thank you for this day. Thank you for everything you've done for us. We're grateful for this skill that you've given us to be able to come and analyze the markets, to be able to understand this trading. And we just are thankful and grateful for the allowance of this skill and putting the right things in front of us. Pray, God, that you'll be able to bless this session, help everything to go well, and that my point will be clear, concise, and understandable. We give you the praise, the honor, and the glory. It's in your name we pray. Amen. All right. So, what I'm looking at for dollar is I am looking at a bullish dollar. The reason why I'm saying this, let's take a look at the dollar and understand some things, right? So, if we were looking at the range that we were in, we were looking on a monthly time frame. This is going to control all our lower ranges. So as we come in on a monthly time frame, what do we have here? We had sell side liquidity that was taken, right? We took buy side and sell side, right? First came and took this high, buy side, sell side. So that gave us a range. As we come into that range, we have an imbalance in price to the bullish side. And then we continue to consolidate. Now, what do we do here? Again, we take buy side and sell side, and then we imbalance above the high, right? So let's look at down where we are on the monthly time frame. We can see this imbalance, 50% of that. We are at a key level of support as we are at the dollar, the $1 range, right? We have a long-term swing low, or this is an intermediate term swing low on the monthly time frame. A swing low here, a swing low here, and a swing low here. This is the intermediate term swing low as we have a swing low on either side of it, right? You have a short-term swing low, short-term swing low right here, right? On either side of it. We have an imbalance in price that we filled as we take the buy side, right? We had sell side, buy side. We're going bullish as we go up. We have a down candle here at our intermediate term, at our short term swing low here, or at our intermediate term low. We can look at this as the propulsion block as we move away from this with 3 candles, right? So this will be a monthly order block here. This down candle here as we come into 50%, the imbalance, right? So that makes this buy side liquidity, right? So we have buy side liquidity resting up here, and we're aiming for that price level, which should give us a 1500 pip move, right? But I'm looking for a strong dollar. What's going to dictate the idea of this buy side being ran is this gap here. We need to create a strong impulse up through this gap and then maybe come back down into the middle of it. We can revisit the middle, but not close above and then push up, right? But I'm looking for a strong impulsive move up through this here. Let's take a look at the monthly structure so we can see the idea of what we're looking at, right? So we're going to break this down starting from the monthly time frame. So let's look at what we have. Again, we have the idea of buy side taken, sell side taken. We have buy side taken again, sell side taken again. Then we have an impulsive move up through this level, right? Up through that level where it is at a key level of 90, right? That was our price level of 90, the whole number, where we created a long-term swing low here on the monthly. If we look here, we created a long-term swing low here. Why am I saying that? We have a swing low here, a swing low here, and a swing low here. That creates this as a intermediate term swing low. Then we have a swing low here. I'm sorry. Yes, we do. We have a swing low. We had a swing low here, right here, a swing low here, and then we proceeded to take that swing low, right? So this is an intermediate term swing low as well, right here, creating this lowest low as a long-term swing low. And we've made our bullish move away from that on the monthly time frame, right? 2021, we pushed away. We came here, had the swing low, swing high, swing low, mitigation block, or you can look at the swing low, swing high, swing low, breaker block right here, right? There's the low of that breaker block. Notice how it did not violate that low of this candle here, right? And this down candle arrangement with this bullish up move, notice how we pick back into that high, that down candle. See that high? Even this one, you can look at this one here. That is your reclaim block. This whole down area, when we bought above that right there, that created this as that reclaim block. We've reclaimed the orders there, right? We've reclaimed those orders there, had a bullish move come back into 50% and a monthly fair value gap. You see how we have a monthly fair value gap pushed off of a key level, supported on a key level, whole level, right? Key level at 50% of this range, right? High, low, 50%. We're in the discount side of that range. We've taken the sell side liquidity that was left here as we impulsed away. This was the liquidity where it left a consolidation of a down candle and then pushed into here. Notice how all the bodies closed above this 50%. This body closed inside of that fair value gap, but immediately the next candle opens above that fair value gap. That's bullish. Look how the body opens above. Let's see here. All right, look how the body opens above that and engulfs this candle, right? There is your monthly order block. There's the high, the open, and the equilibrium, right? And we've come just at that equilibrium, right? So let's drop down to the weekly, look at how it stacks up on the monthly time frame. So as we come into the weekly, we can see we are in a bullish move. How so? We've pushed to the upside, come back down inside of this down candle. There is a propulsion candle that was here that broke the high. Look how we come back down into the body of that candle, right? We did not break the wick of this candle, the body. This is a propulsion candle, and we pushed up out of there, right? There's a monthly open. The monthly equilibrium was where we were at here, right? Bullish move. What did we create? A fair value gap right here. This is our weekly fair value gap. We had liquidity, internal range liquidity here and here inside of this fair value gap. This down candle before this impulsive move is our weekly order block, right? So we know that we expanded out of a monthly PD array, right? Expanded out of the monthly PD array here. We set a propulsion block inside of this down candle and expand it away, right? We have an A, B, C, and a D inside of this range. This is your corrective range. We are looking to impulse to run this up here above 2 standard deviations of our monthly order block, right? So we're looking to run 2 standard deviations of our monthly order block. You can also look at this as a optimal trade entry here, right? Another optimal trade entry here with a for value gap. This is your best optimal trade entry given an explosive. We have a pin bar, as you can see on the weekly. If this stays, well, we got this pin bar right here. We got a bullpen hammer, pin bar. Usually the next candle after this pin bar is an engulfing range. So the idea is to see on our lower time frames, are we ready to move above this yet? But we are in the bullish area, right? So let's take off our monthly structure so it doesn't get too much on the chart. And let's look at our weekly structure, right? As our weekly structure is laid out. Look how we have 3 standard deviations right at this buy side liquidity here, right? 3 standard deviations of our weekly order block, right? We have a weekly for value gap. We have closed above that. Not only once, twice, 3, 4. We have closed above that for the month ending July and beginning of August, right? This is our down candle. We should expand up past that, come back into this, and prepare for an expansion next week. So as we see what we're looking at, we can relatively understand that we are in a bullish dollar market, right? Now we see the expansion. We have the take of liquidity with a fair value gap, the close of the weekly bodies above that. We have a support level at 103.5, 104 right here. Look how we close above the whole level of 104, right? And that is near the opening of this candle, right? 104, 103.983 gives the idea of the support at the key level, right? We're currently below this 104.500, which I expect us to fully push through, maybe to the 105.500 with an 100 pip expansion to the upside, right? So let's look at what type of week we are forming to determine whether it is a good idea for us to take a trade on dollar tomorrow or to take a scalp to wait for a bullish move on the week beginning, the true beginning week in August, right? So let's drop down to our daily time frame. We're going to leave our weekly PD arrays on as we lay this out first and have some understandings. So as we see, we have come down into our daily chart. We have an expansion here a down candle that fills a for value gap, right? This is your imbalance price range. It comes right in here, fills that, opens. Look how this closes. This opens down into that and then engulfs this. This is a powerful candle right here. This dictates, it's called a, this right here is called a, it's kind of like an outside, because you got inside bar. This is an outside bar. And what's so powerful about it is the entire body engulfs this. We engulf it below to take the liquidity in this candle, and we engulf it above. And then notice how we push back into this candle's range in here and expand hard. See that hard expansion after the take of this low here? Look at that hard expansion up. That is what we're looking at here. As we come into our daily time frame, we have a swing high. We broke the swing high first, created liquidity, broke the swing high again. We have come back into the weekly for value gap. Notice how we have not closed down into that gap, but we did the same thing. We closed here. Look how we have opened here and pushed above this range, right? This is on our daily time frame. So our daily is not closing down into this weekly for value gap, and we're at a weekly propulsion block, right? So we can relatively expect a run at least up above these equal highs here, right? On our daily time frame. See that? That is minor buy side liquidity, with this being major buy side liquidity or intermediate buy side liquidity. This is the major buy side liquidity, right? Major, intermediate, short-term buy side liquidity, right? What I want to see is right here where we have this imbalance. I would like to see us run straight through that and then push up, right, at that 106 level. See how that's there? I would like to see us push through this imbalance at that 105 and continue bullish. This, I will fully expect a run of, let's see here, this is July the 9th. So this was this Monday. That was last Monday. So said we ran the weekly high. This should be a, yeah, this is a weekly high. We should be aiming for this weekly high at this for value gap, right? This is where you can take your first profit. That's TP1, right? This should be TP1. It's not there. TP1, TP2, TP3, TP4, right? There's your take profit levels right there, all through there, right? So we are primed for tomorrow to probably be a heavy mover. Let's look at the news and see what we have. So we're going into Friday with a non-farm employment rate, right? So we're going to have non-farm payroll, non-farm employment change, right? Tomorrow. So this is going to be a blast of a move tomorrow. We should see an expansion on the dollar tomorrow, as this is our optimal trade entry, and we should see an expansion. Now that's our daily weekly propulsion block. You can see how we have come into our weekly arrays. Now let's take off the weekly structure and look at the daily structure, right? Oh, shoot. So as we come into the daily structure, look how we have a daily order block here. Daily mean threshold. We have closed above that on the daily. We have the daily propulsion block. here, right? We're coming out of that. The day has opened above the propulsion block and closed above the mean threshold of this of this order block. Look how the 4 standard deviation is this high. 106, 133. That should be our high. For that will be where we push to. Look how that's 4 standard deviation. Look how this is 105, 177. That's 2 standard deviations. Should happen tomorrow. 2.5 is what we should be pushing for right here. As we have this down candle, you can trade to this breaker right here. You should be able to trade to at least this daily breaker right there, right? See that? You can trade to at least that daily breaker tomorrow. That's what I'm calling. I'm calling to trade to the daily breaker tomorrow, right? So as we see this, we understand that on the daily, we are bullish. So let's go down to the 4-hour and see what we can look at and how this could possibly play out for us as we come into tomorrow. And we should see some type of consolidation here at this. Now, what I'm looking at is we have this swing low here. This is a run on liquidity down into a deep discount, right? We have a deep discount, mean threshold of the daily order block. This was the other daily order block. This is our daily propulsion block, right? Because we have a daily order block here as well, right there. We didn't even look at that. Let's look at that on the daily time frame so that you guys can see that. Remember, this is that daily candle with that outside bar. It is here. Look how we've come right there. So we've hit that. This is a daily propulsion block here, right? So we should come into the mean threshold and immediately expand away. Look how we leave that wick, right? We open, push down, take the liquidity, run. That's in our 4-hour. We swing low, take the liquidity here, right? Previous day's low, expand away, right? Wednesday, Thursday, we expand away here, right? So we are bullish dollar with a TP of 2 standard deviations, 2.5 standard deviations, right? We should be able to push up into this, right? And then we should see some type of accumulation here with an expansion to the buy side liquidity to come back down inside of this, accumulate and run away. So we can see the 4-hour is bullish. We are looking for a buy. Let's go down into our 30-minute. We can see, take a liquidity, right? We run the high. We take the swing low here. We create it down. Take that. Run the buy side. Run the sell side. Then we continue here. We filled into a for value gap here with a swing low, swing high, swing low. We have this up candle here. This is a bullish breaker here. But what I want to see is maybe this, because see, this was this morning at 10 o'clock, right? And then it moved away. I would like to see that New York taken back down into this here. I would like to see them take that maybe down into this candle here. Let's go down to our 15-minute time frame. See this swing low. I like this one here, maybe, but there's a possibility that we could come right under this whole level right here. We could push back, come into this, and then expand away again. But there is most likely where we will come into this down candle here, because this is the last down candle with a hard expansion out of the run of liquidity, right? Which is here. Down candles, order block, propulsion block. So I'm looking at the back of this candle. That's what I'm looking at, right? That's what our daily. Let's look at our 4-hour structure, how this compares. See how there is a 4-hour for value gap right here. We've come out of that 4 hour for value gap. We've got this 4 hour for value gap here. I would like to see the back of that, or this candle here. But 15-minute, this line right below that, maybe there, maybe even the body, but I would like to see us push into that high. We could enter on the high, right? And it's kind of what I'm planning. Here's our lower time frame structure. I keep doing that, but I'm looking to enter here. If it goes here, we could possibly see a move here to take this, and we could possibly see a move down into this. There's a 15-minute PD array for me down in there, or a 5-minute PD array down in there. So there's a 5-minute gap with equal lows right there. So I would like to see this pull back down into this and then have our expansion away, right? So we might have already created our order block here with a take of the lows here and here. There's our optimal trade entry. So I would like to see a all right, so I would like to see this. Right, something of this kind of caliber. That's what I'm looking at for tomorrow, or it could just be a impulsive move. But I want to come back inside of that discount level, right? Discount level on the 4 hour, right? And then push away. But we did take these 2 points of liquidity, so it could just come into here. I don't know. I'm not for certain, but I'm looking for a buy, right? I could look for a sell into a buy, but ultimately we're looking for the buy, right? So that is what I'm looking for on dollar. And my bullish take on dollar, I'm looking for Q3 and Q4 to definitely finish bullish as we have the elections coming in. And I believe that's what they're going to bring, the narrative of the dollar, to use it to push it higher, to bring trade into the dollar and other things like that. But this is what I'm looking for and how I'm looking to trade the dollar for this week. So thank you guys for looking at my video. If you could like and subscribe if you like what you see, how I do my analysis. And each week I'm going to continue to put these out, make them better, and we will continue to grow and become better traders. Remember, you only need 1% per day to be better. It compounds. 1% compounds very quickly. If you get in the charts, look at them like you watch TV, the charts will speak to you. So without further ado, I've had my time. Thank you. And I will see you guys.